All right, Annie, thank you. And joining us now is CTV's chief financial correspondent, Amanda Lang. Amanda, on the one hand, the Bank of Canada governor is suggesting he's satisfied with where the rate sits now, but on the other hand, acknowledging how unpredictable conditions are. So what are the chances the bank makes yet another cut when it next decides in December or even in early 2026?
Omar, the central bank seemed to signal a couple of things here. It suggests that despite that strong labor market report we just saw, and the fact that inflation remains a little bit elevated, it's comfortable lowering rates again. But if it's sending a message, it's that we shouldn't expect many more in a rapid succession. Having said that, economists today are, some of them, still saying that we will see more rate cuts, and that's partly because they think the bank might have an overly rosy view of what happens in the economy. Remember, we still have all the wild cards of this trade situation and the effect of tariffs, and the bank is saying it's now going to be able to offer up a better forecast of what it thinks will happen. The expectation is nothing in December. The question next year is, as we reset our economy, and that comes at a cost, is that cost inflationary? Will the bank actually be worried about prices again? Some economists today saying actually the effects of this trade war will be damaging, and we might well see even more cuts in the months ahead. Some people might count on that. At the end of the day, the bank reiterated today what it said last time, which is it thinks it's done what it can on monetary policy, trying to persuade Canadians of price stability, that inflation is under control, but that the real work here has to be done by fiscal policy. In other words, the upcoming budget. Omar?
And you'll be joining us for special coverage on that day, November 4th. Amanda, thank you.